All right. Hello, everybody. Welcome to November's Ask ProVisor. If we start laughing out of control, I just helped spill something on Sue-Ann. So Ask ProVisor. Thanks for coming to our show. We do this monthly. It's for you as real estate agents, where we bring in experts in the field to help you understand how you can do what you do with excellence. We've had underwriters, we've had appraisers, we've had home insurance people. They're all on our YouTube channel, Ask ProVisor, if you want to go back and check those out. Why do we do this? Oh, I just said that. Why do we do this? See, that's how live it is. You can flub up.
Say that.
Yes. Thank you. Okay.
Play along.
So while we're going on, if you got questions, put those in the chat box there, and we have somebody that will hand me the questions so we can work on answering those. And then if you don't want it done during the show, like a question, you can email our normal host, james@provisor.com, and we'll get an answer for you through email as well. So today we have an awesome guest, Sue-Ann Riley with H&R Realty. Thank you for coming.
Thank you for inviting me.
She's been a real estate agent for 22 years, and she's here representing you as real estate agents. The topic of today's show is to ask us as lenders, like, why do you do what you do? Or what about this? Or why do you guys complain about this? And see what we can help you understand a lender's perspective.
Okay.
Sound fair? Is that what you were promised when you
That's exactly
signed up?
But
All right.
only 6 questions, not 12.
Okay. So
My ring just fell off.
we are making sure you understand this is live, people.
Oh my gosh.
Okay.
Right.
We have papers. We as loan officers at our company, when we do these shows, we reach out to real estate agents we know and ask questions in advance. So that's how we kind of prepared. We've got these questions. We're going to work on answers. So if we keep reading paper, we want you to know why we do what we do. So you are the guest. You are the host, really.
I'm the host.
I'm the guest.
Okay. Great.
What would you like to know?
What did you have for breakfast?
I had a little bit of chicken, and I just had some omegas from the little snack thing we have.
Oh, okay. All right. I will stay professional here. Ritchie, how can we as realtors, as a buyer's agent, help the loan process go smoother?
Very good question. So one that, because I'm licensed in several states, that has come to light for me is in Illinois, they have a clause where if a contingency date falls on a holiday or a Sunday, it advances to the next business day. And I don't know, maybe you catch it just great. Maybe you all catch it great, but it happens once in a while where these things are falling on a Sunday, and it just takes days away from the process. And for us as lenders, like, we're counting every business day how to get a loan done. And like this time of the year, a 30-day closing really isn't 30 days.
The holidays.
There's Thanksgiving, there was Veterans Day, and all that. So that would be helpful. How do you pay attention to where these could fall on a potential?
So let you know the dates that I have and see if they're the same dates you
Yeah.
have.
And it's hard when you're going to put in 25 days. You don't know when the offer is going to be accepted.
Right, but I do that as a realtor as soon as it gets accepted, so
Yeah.
I know the dates, so the buyer
Good
knows the
call.
dates, and that's something I could provide to the lender,
Yeah.
Carrie.
A coworker carries behind the scenes, folks. Okay, the other one with those dates is the closing date. Yes, I think everybody likes a 9 o'clock closing, don't they?
Yeah, mostly.
Yeah, as lenders, we like afternoon closings. At least I do.
Yeah, because still pressure in the morning.
Well, because if something happens,
Yes,
which
yes.
right, surprises happen. That gives us the morning to wrap up some paperwork that may need to be done, and a person can go to a bank, because really a 9 o'clock closing time on closing day means we're really closing the day before for us and the customer,
Right,
because they got to go to bank, get the money, and do all those things.
right.
So nobody tries to be last minute with this stuff,
Well, that's good to know.
but I think every real estate I would hope they know what happens, right?
Right.
Another one is earnest money. Can you share with me, like, I'd like to know, because I've not asked real estate partners I work with, what do you say to a customer about earnest money right after accepted offer?
Where it needs to go
Okay.
and how much.
Do you have
and
any,
they have to deliver it.
how they have to deliver it?
Yeah.
Do you ever have to ask about the source of it? Do you ever think that?
No.
Okay, that's what I want to share.
Well, initially I do, because I
Okay.
tell them when we're looking at houses, these are the three things you're gonna be paying for up front. It's
Yeah.
earnest money, the inspection, the appraisal.
Yep.
So I do mention all that and assuming, and I always say 1% of the purchase price is usually good for earnest money. So then they kind of have an idea of
Yeah.
what they need to have. So,
So-
and then I just kind of leave it at that because I leave it up to you guys to know their finances.
Right.
Sometimes they don't want to divulge.
So what happens at times is, so when I said, what's the source? Two things with that. Money orders don't work well.
Right.
And that does happen. I get shocked at times at people that don't have a checkbook.
Yeah. Younger generation.
Or they don't even have,
check.
I just had one, didn't even have a bank account.
Yeah.
I'm like, oh my gosh, right? So we can't take that for granted. It's hard to remember everything. So that is what earnest money is to real estate. Make sure you're having that conversation about the method that they're going to pay with.
Yeah.
So we can track it and maybe ask them if the money came from the sock drawer.
Okay.
Because that becomes an issue for us potentially when the size of the earnest money could be of how do we source what was sitting in the sock drawer.
Right.
And that's becoming more and more prevalent of people telling us that, yeah, well, that's where I keep my money,
Right.
you know? So,
Or if it's gifted.
yep. I see this one a lot, but I want to cover it from the buyer side is when you're including stuff that's not really part of the house, like a stove. Isn't that, I've always learned that if you turn the house upside down.
That you're not supposed to write junk on.
Yes.
Yes.
But if you write junk, it's okay.
Right.
It just has to say no value.
And initially I'll say to the buyer, we're going to put it in here, but
Yeah.
it's probably going to get kicked back because of the lender, because it's not value to the home.
Right.
And then we'll do it on a bill of sale, or I'll just do a bill of sale right away.
Right. Yeah. If they're going to pay for it.
Right.
Right.
Or
Yeah.
even if it's zero value.
So does it make
they
sense to, do you, maybe I will still answer, but I wonder, do you know what it means? Like, why do we have to have it say no value?
Because it doesn't apply to the value of the home.
The home,
Yeah.
right? Because we can't have, when an appraiser goes out to a house, to value the house, they have to value the house and the land, not anything else that's being left behind, because that is, a mortgage cannot finance the lawnmower that they want
Right.
to leave behind,
Right.
okay?
Yep.
Then, one more, and then it is when you have an amendment that has to do with repairs to the house. Understand that whatever you write there,
You read.
we read and an underwriter reads it.
Yeah.
So I've had a few that have been shocked that like, well, we have to put it there. And I understand that. But understand that if you're going to write that, they need to repair the bare electrical wires hanging out and throwing sparks all over the house.
Yeah.
We're going to need contractors to fix it, lien waivers, even if the appraiser didn't catch it for some reason. That's a safety issue on the house, and the underwriter is going to go, hey, this is against the rules.
Right.
So that's one where if everybody to understand that if you open the door,
Right.
we got to close it.
100%. And I tell my buyers that, we're going to have a licensed contractor, not an uncle.
Yeah.
And we're going to have lien waivers and paid invoices and all the work that's completed that is on this amendment.
Yeah. So on this topic, I have one surprise one for you that I didn't tell you before we started talking.
I'm looking at Carrie right now.
It's a tip. You really don't have to ask the question. I want to know your reaction to it.
Oh, I
If you ever
can't
heard
wait.
this.
I can't wait.
So I was at a closing and the title person, when we go to closings, we talk about stories of things that have happened, right? The title person was telling me the story of seller pre-signed, went on their way. 2 days later, the buyer comes to sign, everything's done, everybody's happy, and the buyer goes, okay, so how do I get the keys? And everybody looked at everybody and nobody knew where the keys were. So the title person said they called the seller and say, hey, where did you leave the keys? And the seller answered like, call the sheriff if you want to get in the house. That's exactly what. So now I've asked several real estate agents this. Did you know that in the offer to purchase, it does not require them to hand over the keys to the house?
No, I did not know that. I assumed it. Like, this is what you do as a listing agent. You make sure you have the keys at closing for the buyer.
Yes.
So,
everybody has answered just like you did.
yeah.
And so when you go
It's
look,
kind of a no-brainer.
it's a no-brainer, but that's the story that just happened. He said,
Oh
call
my
the
gosh.
sheriff.
So what did they do?
I don't know. He didn't know the result of that. He just knew what happened in the closing.
Why Oh, I see, I almost swore.
I know. I don't know that, but
Yeah, that's
I've
frustrating.
had several people look, and in section 482, it just says that the seller has to grant occupancy and broom sweep the house.
Yeah, broom sweep the house, I knew.
Yeah,
But that's very strange.
it is.
Because as a listing agent, though, the procedures, you do the final walkthrough, and you
Get the
negotiate
keys.
how you get the key if you're gonna be at the closing.
Yep.
So you make sure that there's gonna be a key there.
So I bring it up on this one, not as an answer to the question, but as a tip for everybody to start thinking about. Because I mean, I get it's rare, right?
Yeah.
It's just courtesy. But do you have to, and write keys have to be presented at closing, as a buyer agent when you write the offer?
Well, I guess you should.
Yeah, I guess. I mean, one real estate agent called the WRA and they had to admit it's not in there.
Yeah.
It was like,
Well,
wow.
that'll be changed.
Yeah.
We'll just add another page.
Yeah, another page, 2, 5. Okay, so that's what my tips are for the buyer agent side.
Okay. How can we as realtors, as listing agents, help the loan process go smoother?
For me, the biggest one's always been around condos.
Yeah.
Okay. Because you're aware, I mean, we have to do a condo questionnaire. We've got to get budgets. and now
If it's
was it
financeable.
financeable. And a year ago, we got to start knowing about the maintenance of the condo association, because of those condos falling down in Florida,
Yeah.
the balcony stuff. So I've believe what would be nice in the process is when a listing agent takes a condo listing, get the condo questionnaire filled out for a lender in advance so you know the answers, and also know the answers that are proper to get a loan to happen. That like 49% of the or less of the units can be rented. If it hits 51, we've got a problem. I've had one where the master liability policy, they did not, for the condo association, they didn't include theft against employees protection. And that stopped the loan, and the condo association would not update their insurance policy.
So I've never seen a condo questionnaire, I guess. Is that something that the buyer gets?
Your wonderful loan officer, Carrie, can get that to you.
Well, Carrie and I've never done a condo because she would have otherwise.
By the way, folks, Carrie's my coworker. She's in the background here. No, if any real estate agent,
I know, but nobody. I've never had it from anybody.
No, because the lender usually sends it straight to the condo association.
Yeah, okay.
And so I've been talking about this more and more over the years as I build relations with real estate agents and going, how can we make this smoother?
Well, actually, it would be nice to know even before showing them the condo.
I think we could take the listing, yeah.
Right.
Yeah.
Getting everything.
Yeah, because don't you have a section in the MLS you can put docs?
Yeah, we do. I upload all the docs as far as the bylaws and stuff, but
yeah,
those little technical questions, no.
Yeah, so that I would say to all the real estate agents, whatever lender on this topic, get a hold of that lender. Ask them for the condo questionnaire from Fannie Mae that they can provide you in advance. And when you go to take a listing at a condo, stop by the condo office and ask them the questions so that you can just put it in the document section. Right. And now everybody knows up front when they come to write an offer, if this is going to be a warrantable or non-warrantable condo, or we do single unit FHA, like a condo has to be FHA approved. Well, we can do loans in ones that are not FHA approved. It's as a single unit. But I coach my buyer agents, hey, before we write the offer, can you call the association and ask these 5 questions? Otherwise, we don't know if we have a deal.
Okay, so that's good to know, because I will call Carrie or whatever lender to find out if it's even doable just initially to finance.
Yeah, so, and I think
that's basically the only question I'm concerned with. So it's good to know.
Yeah,
there are other ones that
they'll do
to be looking out for.
And then if there's shared wells or shared driveways, as a listing agent, knowing if there's something recorded.
Yeah,
because I've had a couple where over the years where we've had to get a lawyer and because it was just a handshake.
Yeah, I have too. And I do ask that if I see that it is a shared driveway, I'll ask the listing agent or the seller, of course, if they have something.
Because we don't want to find out, otherwise our normal process, we wait until the title company tells us.
Right.
Well, how far along in the transaction are we at that point? It's tied up the house. And this one's, okay, sorry everybody, but I just kind of chuckled at this one. Well, making sure everything's signed properly before we as lenders get the offer.
Oh, that's never a problem, is it, Karen? or any lender I've ever worked with.
There's
I blame
initial.
that on Adobe.
Okay.
Sometimes it doesn't carry over when you send it because you have it, but it didn't go over.
I've had that happen.
Yeah.
Yes.
So if it's unsigned, that's because I will not solidify any deal until I see all the signatures.
But if you think that's not unique, I'm telling you as a lender, it happens way more than people think, whether it's software, whether someone just missed it. We get it.
Right.
They just missed it.
Right.
But checking that would help it go faster because now you don't have to track back to get that.
Right. And it's sometimes usually pieces you send over later, like amendments or something, and then it doesn't follow. But it's signed in my copy. So.
And then the other thing is with the seller, two things. One is, are they a power of attorney person? Are they the real owner of the house? And, depending on what you know of their history, it's very relationship. So I know you may know, but it comes up where the seller signed it and all of a sudden the title comes back and they're not the owner.
Right.
And they're a power of attorney. Well, then we got to get documents to show they have the authority to sign.
And I tell them that from the get-go, especially if I know it's a family that's like it has the family and the family selling it, and there's going to be a trust.
Yes.
I always see the title company's going to need all the paperwork.
All the paperwork, and we need it as well to know. And then the other thing with the seller is asking if they're going on vacation on the closing date. That happens.
Well, they can pre-sign.
Sorry, that should have been on the buyer side. That should have been on the buyer side because you threw me there. That was a good answer. On the buyer side, as you're back to the buyer side, if you got your buyer, find out if they're going to be out of town on the date you write in the offer. I had one guy who was going to be in the Philippines for 3 weeks during the offer, and he wasn't going to be back here for closing. So we worked it out how he had to go to the American consulate or something and sign it, and so we can work through that stuff.
Right.
But finding out close to closing is going to be more stress on everybody.
And I usually let them choose, and then they go through their calendar and see what works for them. So that's never really been an issue.
Yeah.
But I know it can happen.
Yeah. So that's my answers to that one.
Okay.
I think we kind of covered the next one. I already peeked.
Okay. We'll do that.
The question was, what makes it tough on us as lenders to do a loan? And I think I kind of a similar question. Right. Yep.
Okay. So when realtors pick a title company, what is important to the lender in the title company? So communication
always, everything we do, right? My question, as I try to answer this, my question back to you, as a real estate agent, do you know that real estate agents, lenders, nobody can dictate the title company that the buyer use?
You cannot steer.
Okay. If you're in some counties in the state, Dane County, right? I always say to my buyers, it is courteous to use the title company the seller wants to use. And some people don't like that when they find out it's going to be two title companies in certain counties of the state.
Right.
And so that's where this question kind of came from, to know what's important, because not all title companies are the same. Have you experienced that there is difference between them?
Well, as far as some that travel, some don't. Like if I give I know they travel, and then if the buyer gets one that, the title company, then it's kind of a hiccup. But other than that, I mean, I ask the buyer if they know a title company, and if they don't, then I just use who I normally use. Not for any particular reason, but I know we'll get it done.
Yep. And us as lenders, on our loan estimate, there's a section of, the title fees are in a section, say, services the borrower can shop for. So every lender's required to ask them that same question. Do you know what title company? I've had one in 12 years.
Yeah. They don't even know what the title company does.
They don't.
Yeah.
So now as we work with the title company, what's important to us? Communication, but speed of responding.
Yeah.
I mean, I actually had one title company. We were 3 days before closing. Well, we don't have to get that title commitment out yet. We got closings not for 3 more days. I was like, my jaw dropped.
Yeah.
And I'm not saying, but we knew a title company that we had it within 12 hours.
Yeah. Oh, I know. Switch. I only work with the ones that I know are going to get it done. I mean, I will try different ones, obviously, but I don't steer towards one or the other.
And I think most agents, real estate agents, are like that.
Yeah.
But if you don't know a title company, that is stuff to understand. when you're doing something, I'm trying to think I can't think of a scenario where you would know.
Right.
We don't know at times because I can do loans in Florida. I have no idea who these title
Right.
companies are.
There's so many.
And there's so many to choose from. So I have to trust in that. But there is a difference in title companies when it comes to title commitment. And one of our shows, we had a title company on, and we've known this for years, and it's how judgments are handled in the state of Wisconsin. Have you heard this before?
Well, I know that can become an issue
It can.
when the titles ran.
Yep. There's no workaround when it's a seller.
Yeah.
If your seller has judgments, they're getting satisfied at the closing.
Right.
But on a buyer side, in the state of Wisconsin, a judgment is a lien against the house, but not until they're the owner. So some title companies believe they should put buyer judgments on the title commitment. But we're like, they don't own a house yet.
Right.
So why are you doing that? And then some believe they should just put it in the notes. Well, in those two things, everybody's becoming aware that there's this judgment debt. And what are we going to do with it? So knowing the right title company and how
they don't have to be satisfied before closing anyways?
No.
If it's a judgment on the buyer?
No.
Oh, I've had issues.
It's unique to the state of Wisconsin.
Right.
Okay, I'm not
like child support, that kind of stuff. Like
judgments can be active like child support. If they've been making payments for 3 months, we just put in the debt to income ratio.
I guess that wasn't a really good example because I have had that happen.
Yeah.
Where a buyer has had judgments and we had to go through loopholes to get it closed.
Yes.
Legal loopholes, but
yes,
it took longer than expected.
It does. So that's what judgments in general, and where I try to highlight this to everybody is that a judgment's not bad, because if the rule was it had to be on the title commitment before they're owner of the house, then why can they make payments? That's in the lending rules. But where it really gets annoying to everybody is when certain counties in the state of Wisconsin put a parking ticket as a judgment.
Oh.
All of a sudden we're
What
going
county,
to Washington, Walworth, Rock County. As we caught them.
That's crazy.
It is. I just had it. It was like a $90-some judgment, and it was a parking ticket.
Did you even know about it, the buyer?
No, had no clue.
Guess that's a good one.
And the title company insisted that they had to keep it on title commitment. And I said, I understand your view. I'm not trying to tell you not to do it, but we have a loan to close and we're going to work around it. And I have to use a different title company, and then all of a sudden when it got to upper management, then they could take it off.
Oh,
okay.
Okay.
So, but just be aware of with the customers, there is a workaround, and why you choose certain title companies is important. I'm not saying the ones who put it on there are bad.
Right.
They've got their underwriters, they've got their risk, because we know what is title commitments doing. They're ensuring the title that there is no issues on that house in the future. So they've got to handle that the way they need to, but just understand there is a workaround and why we care about what title companies, how they do things. Those are the three big ones.
Are you ready?
I'm ready.
Okay. I know we kind of said we might not bring this up, but how has the NAR settlement affected loan process and approvals?
For us, it's really been nothing as lenders.
I would have to say.
There was questions early on, like, is Fannie Mae and FHA going to increase the seller credit amount because maybe they do it that way? And everybody's worked it out on your own world that's really not an issue. They did not change any of the seller credit percentages to compensate for it.
I think it was pretty seamless. I think we were all worried, but when it all came to light, we were good.
Yeah, but no, as the lender side, it's really been no big deal for us.
Okay, good. Why is it important to not use cash for money orders for earnest money? We talked about
we talked about that one. We just can't source it. We have to know where their money came from, so we know it didn't come from illegal sources. The seller, you as a real estate agent, us as a lender, appraiser, all that stuff is just not allowed. So that's why we got to know.
Okay. For loan rules, what is the proper address to use in the offer as we get lenders who ask us to redo addresses?
Don't you love that?
Tax records.
2 places we check.
Yes.
The property tax record, and we have to go to the post office and we type the address in, and it will tell us the address there as well. And we fully understand as lenders, there is the legal address and is the mailing address. But a mailing address is not the address they're going to live in, own.
Right.
on legally.
I actually just had that with Carrie, with Oconomowoc, with Exonia.
Yes.
Change everything last minute because it was actually not that address.
And we get, I mean, why would it be, first reaction for me would be, well, why would you guys not use the legal address? But if you want to properly market it where the house is located, that made sense to me.
I look at the tax records and that's basically what I go off of when I'm listing it. And then as a buyer agent, I go off of what the listing agent has on there because I'm assuming she has looked it up too.
But there's advantages to actually maybe using this not legal address for marketing. Like the house, like when you say like Exonia and Oconomowoc.
Right. Well, the MLS, it has to be based off the tax records. We can't put any other. You can't.
Oh, okay.
No, they made sure of that. Like you have to look, and what that says is what has to be on the MLS. So
didn't know that.
If they live in a like Rochester, because I'm in the Waterford area.
Yeah.
Rochester, but you want to put it in a Waterford zip code because you get more present. You can't. It's got to be in Rochester.
Okay.
So.
Very cool. All right. So that's what we need to do. I've not done the little mini commercial to remind everybody, if you have questions, we have someone standing by, put them in the chat room. We'll answer those for you here, or you can email james@provisor.com if you got other questions. All right, what's up next?
Okay, for loan rules, oh my God, I just said that one. What name should we use for the borrower in the offer as we get asked to change by lenders?
Legal name. That's what, Carrie, would you agree? That's what you use? Yeah.
And I have to say I kind of lax on that. I do go off of that, but I tell people, give me your legal name, how you want it on there, how is, especially if it's like, a common name.
Yeah, because, you look common name, they got junior, they got the third. Right. When I put together a loan file, I am going legal first name, middle initial, legal last name, and any extra junior, senior, because that's what's going to be recorded. And that's what's going to protect them if something happens later, that they can legally show I own this property. Okay. So that's what we're asking for, that to get changed, because we want to get that proper.
Okay. What should realtors know about money to bring to closing as it relates to wire fraud?
You guys get a lot of education on wire fraud?
Well, I think it's happened.
Yeah.
Like a buyer lost $180,000 in a wire fraud. He didn't get it all back. He did get the house, but it's
heartbreaking.
It was his retirement. It was horrible. And it was actually on the real estate agent on how it happened.
So if you haven't paid much attention to this as a real estate agent, wire fraud is real. It is someone said this to me once, it is much easier now for a criminal just to sit behind a computer than actually travel to someone's house and trying to break in the window and steal it that way. Yeah. It's like it can be very incognito as you try to do things online, and they're very good at it.
Yeah. Oh yeah.
Very good at it. So we tell all our borrowers, do not listen to, no offense to you.
No, I say it too. Don't.
No offense. Yes. Do not listen to anybody but your loan officer about what to do. I don't even do the title company.
Oh, that's usually where I feel it.
In a cash deal, you would have to.
Yeah.
But I do even say don't do
the
that.
Instructions directly, like they do, or the title company generally does.
On that, we've now decided that we want them to interact with the title company to get it directly from them.
And then
sorry, title companies, if you're watching too, but it's a risk factor.
Well, I feel better about that too. I don't want to be any part of it.
Yes.
Like I don't want to be as an agent saying this is where you need to send it, follow these rules.
Right.
No, it's like it's on. You find out from them. Your lender will let you know the numbers and then how it needs to get there.
Yeah. So telling your buyers, I keep talking like a lender, tell your buyers and your sellers, if you get any communication about money to be wired, stop, don't do anything, and call you as a real estate agent or call their lender and go, hey, is this true? Even if it's coming from the person's name, because these fraudsters will just change one letter.
And that's what happened. They changed one letter. They sent it to the buyer on a Friday, told him he was going to get a discount if he paid it that day. Oh. He went to the bank, didn't tell his agent, and the emails were coming from the agent's email. That's how the guy got into the loop. But so then Monday they're doing the walkthrough, and he said, yeah, did they get the money? And she's like, what money? And he said, I already wired in 100 and.
Wow.
Oh my God, that was just jaw dropping.
Is it really our responsibility? Did we do anything wrong as real estate lenders? We don't. No. But they look to us because they don't buy houses every day, right?
Oh, exactly.
Now I did talk, as we discussed as our company, I talked to a couple title companies because I don't know if you're that way. We kind of like, once the money for closing starts to break $10,000 or $20,000, you got to wire money, right? Yeah. And the reason for that is the title company on the day of closing is responsible to disperse money to everybody. And the last thing they want to do is disperse out $300,000 and the check that the borrower brought or buyer brought bounces, right? That's why they can't do personal checks. But I have asked a few title companies to help fight this wire fraud. If the buyer, or if it's even a cash deal, if they bring a cashier's check like 6 days before closing, that allows the title company the time to put it in their bank and now call the bank that it came from 3 days later and make sure it's a good check. Yeah. Now the borrower can feel more in control and not succumb to this wire fraud. So if you haven't thought of that, check what title company that you like to use and ask them about that option. Do in advance to help fight this crime.
Okay. Yeah, it's terrible.
Almost to the end. You got 3 left, 2 left.
Okay.
You got to do this last one because this one that I put on there.
I know. I got to see if this actually happened to me. I have had lenders. Do I?
You can, however you want to word it. This is a question for me. I wanted to talk about this.
Tell us Alta. We get from the title companies, not final number, and it confuses the buyers. And we say, yes. Oh my God.
All the time.
Closing statement. Anything you send them, they're just so confused.
Yeah.
I'm confused, and I've been doing this. I mean, there's a lot of things on there that, they don't get, like debits and credits, like that kind of thing.
That kind of thing.
Like, why is this paying?
Yep.
Essentially it makes sense, but not to them.
And some title companies send it directly to them. I mean, the buyer, seller, borrower, however I want to say it, that is the title company's customer too.
Right.
Like these people are giving money to them. So they want to serve those customers well. But from the lender side, it gets confusing to the customer. And I've asked real estate agents like, hey, I get why you have to have the Alta, right? You need to check the numbers.
Right.
And it was made for still balancing out, but it does not include loan information. But from the buyer side, when they're getting a loan as the borrower, I always say the wisdom is like the only place you want to get final numbers from is me, the lender's company, because you're bringing $10,000 to the close and you want to know the numbers, but we're sending over like $200,000. So you want to know that when we say the numbers right, because we're bringing the bulk of the money, you're matching with us. And sometimes what happens is the Alta gets delivered. The title company fully believes it's the last thing, but then we got to slide something in there.
Right.
Because we caught something. And that's where I say, I, as a lender, and check with your own lenders that you work with, don't deliver the Alta to the borrower. Let the closing disclosure from the lender be the final.
I don't do that. Like whoever I use generally takes the buyer might ask me questions about it.
Yeah.
And then I say, you need to ask the lender because I don't want to misspeak and that. But I mean, that's generally how it always goes. Okay. Fannie Mae and Freddie Mac put out an article saying the average cost to originate a mortgage is up 35%. What are the costs to originate a loan?
Have you heard this before personally?
No.
Yeah, one of real estate agents asked one of our other loan officers. They read the article, and is the cost of doing a mortgage up? Yes, it is. I mean, inflation, right?
Right.
And so the person who asked this loan officer wanted to know, like, what is the cost? And so I'm just going to be quick. I'm going to rattle off a bunch of things that lenders have to pay for. As I give you this list, this is not company level stuff. This is John Doe wants a loan. What are the fees we incur to do just John's loan? Nobody else's, just John's. Well, we got to do a flood certification with FEMA, the federal government, the flood zone. We got to verify a social security number. We got to verify their tax transcripts for the IRS to make sure that they gave us proper tax returns. We got to get a credit report. We got to use a risk software called an automated underwriting system, which comes from Fannie Mae and FHA, where it evaluates a person's overall risk. They charge us on a per loan usage. There's a thing called the tax service fee. This one's kind of funny to me, in case you all see it on an Alta or something. When a person escrows, the lender's supposed to pay their taxes. Well, there's a monitoring service every lender gets that will alert everybody if the property taxes aren't getting paid on time. which I think is kind of funny because that's monitoring themselves.
Yeah.
But if someone's not escrowing for taxes, property tax and home insurance, this now alerts everybody that the borrower's not paying it on their own. So tax service fee, there's an underwriter's time, there's a processor's time. If many lenders use a warehouse line to temporarily borrow the money to fund it at closing until it gets placed in its final position. Well, those warehouse lines have credits like a credit card and they have interest on it. There's a fraud report that gets done during the underwriting process to look for, gee, does this person own houses that they didn't tell us about? Is their name really their name? Are they living where they're supposed to live? It tells us all kinds of information. That wants a fee. Some people work for very large companies and we can't call directly to verify their employment. We have to use this third-party service to verify their employment. There's a compliance software that we have to use that sends out the documents for them to sign that ensures that those documents are legal. I mean, all this stuff just adds up. I mean, some of it's $8.
I know.
It's credit reports 81. I mean, it just adds up to the cost. So credit reports, for example, that's when I'm most aware of how it's increased. I think only like 3 years ago, it was $40 and now it's 81, double. And all those stuff like people like hate these annoying calls they get when we pull credit report. I say, well, the only plus side to it is if that were to stop, that's a revenue stream stopping at TransUnion and credit reports are going to go even higher.
Right.
So that's like a list of things that just for that borrower that just add up just to do their loan because of all these checks.
And I do have buyers that will say, this is how much closing costs are. Is this right? Like,
yeah.
And I know on an average, I can usually say that what it is, but I don't know for a fact. So it's nice if they know initially
what it
everything
is.
Instead of just kind of assuming.
And there, as you're coaching somebody through, a buyer ask you about the closing costs from the lender, like, is this legit or not? This is where it's going to get confusing for you all. Our company has chosen to take this and make it one lump fee, okay? So that it's not as confusing to the customer is what we believe.
Right.
But some lenders will take and list all these things on the closing disclosure with all the individual prices, which their presentation is like, well, they can understand why they're paying for a credit report. They can understand why they're paying out for a social security verification. So every lender displays it different, which makes it hard on you all as real estate agents.
Right. And I guess too, with a buyer not knowing, like there's a down payment and there is closing costs because they kind of think that's everything. And it's like, no, you still have to have a down payment. So by saying this is your closing cost, it's not counting that in as well.
Counting that in there.
So,
and just we probably covered this in past shows, but on a marketing sense for some lenders, also understand there are closing costs and there are prepaids.
Yeah, that's another one too, yeah.
And people will advertise that they've got $500 closing costs. Well, that's just the part the lender is keeping for their fee, but it doesn't include credit report, social security, appraisal, all that stuff. And it gets confusing to customers. I've started over years, started using like, hey, you got fees. Right. They can understand fees. Right. They don't use our lingo.
Right.
You know?
Exactly.
So, but yeah, that's why they've gone up. There's all these little fees and everybody keeps wanting more money in the day of inflation.
Right. Okay. How is a company the size of ProVisor better suited to keep their costs low compared to big nationwide companies?
So I didn't come up with that question. You didn't come up with that question. Whatever real estate agent, thank you for allowing me to do a commercial for ProVisor. Why do I think we only do one thing? We do mortgages. We don't have checkbooks. We don't have savings accounts. We don't do auto loans. We are focused on one thing and try to be very good at that and very efficient at how we do that. And so a smaller company, well, when I say smaller, in our world as non-delegated lenders, we're not that small, okay? But we're not a bank like a Chase Bank with hundreds and hundreds and hundreds of loan officers. We're a size of about 30 people between loan officers and operations staff. And our normal host, James Mercado, is the president of our company. He pays attention to the expenses. And because it's not a big thing, it's not spread over hundreds of people. So that's why we think being smaller does help in this industry. Because you can pivot and move a lot faster. And, you know, I can call up my coworker and say, move this file. You know, and how does that help in everything to make more efficient and keep costs low? because we're not layered with management upon management upon management upon management. I mean, it's pretty efficient. And
and when I recommend ProVisor to a buyer, I throw out names and stuff, I always say they're going to look for the best loan for you. They're going to keep the costs where they should be. So I like using ProVisor type lenders more than I like using big banks.
So I would say to all you though, with this question, how do I take it away from my company, is if you're going to develop a partnership with a lender, understand their structure of making decisions. Ask them, how many people are involved in a problem? How many layers are there to your company when you do these things? Because the more layers you find, the more difficult it's going to be to move quickly when problems arise.
You know who we all hate.
I'm not saying it.
It starts with a U. I'd like to sit in a room with them one day. Should I say that?
No.
I shouldn't have.
Okay, we got a question from the audience.
I don't like inspectors either.
Okay. I don't even know what it says. So
Okay. It says, which servicing company do you usually use, or is it based on the best rate for the borrower?
Okay.
Do you know the different components used on how often the loan is sold, or can you give the borrower an idea of when the loan might be sold? Oh, yeah, that's a good question.
So let's talk with loan sale in general. Companies like ProVisor, we don't hold the loans. We're not licensed to be servicers. It's a whole nother big group of compliance things. And so we fund a loan at closing. We use our own money, and then we place it at one of the lenders we work with. That's a transfer of servicing. Servicing is our industry's term, who they write checks to. Every lender in the United States, I would bet, retains the right to transfer the servicing of the loan. Heck, my boat loan just got transferred. I didn't know they even did that.
Yeah.
And for your buyers that say, oh, I want to use this local bank because I can walk in. I understand that. But I still remember a bank in Madison that just went out of business about 4 years ago. They didn't retain the servicing of all the mortgages that they did. They sold them all. And they were a local bank. So and why does it happen? My best understanding is because banks got to hold this amount of debt compared to deposits and all that balancing. And sometimes they need to release. They got so many loans, they got to release it so they can take in more and, at a different interest rate. So that's the servicing. What was the first part? It said something about choosing a company.
Which servicing company do you usually use, or is it based on the best rate for the borrower?
Every loan officer should start with what's the best rate. Okay. But the second part to that, and we covered this in another Ask ProVisor where James and I did it, and it's about lending overlays. We go down to a 500 credit score, but maybe my best lender with the best interest rate has an overlay to the lending rules and says they won't go below 640. WIDA is one of those on an FHA loan. They may be the best choice on a rate, but your 600 credit score doesn't work for them. So that's how we have to start to pick on where we're going to place a loan. I always start with rate first because that's what's important to people.
Right. Well, yeah, they ask that. I usually say it's based off your credit score of where they can put you what type of loan you're going to have. So
and then we do take, like for us, we have multiple lenders that we have. We keep a nice list of them so that we have options, because some do this type of loan better, some do this type of loan better. They all have different interest rates, and so you're trusting the loan officer that they're doing the best thing for them. If your preferred lender is somebody that is a bank or a credit union, they may not have all the options.
Right.
When a customer wants to know what their options are, a bank may not do a USDA rural housing loan at no down payment.
Right.
So that is and when we look at lenders, I tell people all this and use this with your customers when they're concerned about their lender. I tell them, if you go to Google and do a search for the particular lender that I told you I'm going to place you at, I can guarantee you're only going to find negative reviews.
Yeah.
Because nobody goes to Google and say, this company is awesome.
Yeah.
They take my check every single month.
More than they want to compliment.
They do. Did we answer that one hopefully then?
I think so.
All right. Did you come up with any questions on your own going through this?
No, but no, I mean, it was great. Very informative. And I just want to say that, and this is not, I wasn't paid to say this, but I know when I work with ProVisor, I know that they're going to take care of my buyer and they're going to find the right loan, the right everything for them. So I feel really secure when I do recommend ProVisor.
Thank you.
100%.
Even if it gets a little rough.
Yeah.
We were talking beforehand. Sue Ann was on a transaction with me and it got a little rough.
Yeah, it got kind of mean. I got kind of mean. But we got it done. That's all that mattered.
That's what matters.
And there's some lenders that just throw their hands up.
Yeah.
And like, we got to move on. And this is where I bring them to.
Yeah.
ProVisor. If a buyer has a lender that's just,
Thank you.
I got somebody that's going to do it and they'll get it done. And it gets done every single time.
Thank you.
Time.
Well, thank you for that. I appreciate that extra comment. Well, folks, everybody, this is it for today. Thank you, Swan, for joining us.
Thank you for having me.
Next month, we are going to talk about VA loans. Now, when we did this, we promised that this isn't about us as lenders. This is about educating you as real estate agents to help you be excellent at what you do and get some behind the scenes type things. So talking about VA loans can sound self-serving. But the heart of what we're doing, and you kind of reacted when James was in here earlier, and that is VA loans. When you're on the listing side, you kind of go, right? It feels a little tougher. Well, we're going to talk about why a VA loan's great and not have to worry so much maybe about the whole peeling paint stuff that you want to do. Because there was a study done, I think it came out, I don't know if you remember this, Carrie, 2 years ago. There was a study based upon the percentage of loan types closing. And the VA loan is actually the highest percentage of closed loans, not in volume.
As it should be.
But it has the best opportunity to actually get to the closing date, even over a conventional loan, because everybody's focused on the house and you guys don't have to think about the lending rules. And the VA can be very lenient on a lot of things that a conventional is not. So next month.
Oh, I didn't know that. That's good to know.
So we do this every month, second Wednesday of the month at 10 a.m. Go to Ask ProVisor on YouTube, see our YouTube channel. You can see all the past ones we've done and get the education. But thank you for joining us, and we'll talk to you soon.
Thanks, Lynn. Thanks.